Hello and welcome to the New Indian Express. The tariff war has shocked the global market. Market instability has forced investors to keep their fingers crossed. Despite all this, the price of gold is surging. Wonder why? The yellow metal is always seen as a hedge in times of instability. Today we will be talking to Mr. Gnanasekar, Director of Commtrendz. He is a commodity market veteran with over 20 years of experience. He will be talking to us about the surge of gold price and its market implications. Hello, sir. Welcome to the channel.
Hi, pleased to be here. Thank you.
Now, for my first question, what are the primary reasons behind this gold price hike?
See, it's not rocket science because I think everyone is talking about it these days. Even in rural areas, I work with many dwellers across the country. They tell me that even in rural areas, people who generally, the savings typically they put it in gold. Like a farmer who's got his a crop and then he makes some money, immediately the savings it goes into gold. So even they're talking about Trump tariffs and they're monitoring the situation on a daily basis. So the major reason basically is the uncertainty that has been created due to the trade barriers and tariffs that's going on. So this uncertainty has led a lot of investors towards the safety of a physical asset like gold. Uh, because historically, gold has been sought after as a safe haven in uncertain times and difficult times like this. Both economic uncertainties as well as geopolitical uncertainties. So the main reason is the uncertainty that surrounds the trade tariffs and what will happen because it's a very new situation. It's not something the market can analyze or anticipate what's going to happen. So since there is so much of uncertainty about the result of this tariff war that's happening, it is absolutely unpredictable because it is not about one country putting a tariff on another or multiple countries. It's like two leaders. This whole everyone knows this tariff war is about U.S. and China. So the two leaders and how they take this and how they're going to actually transcend this is something which is very unpredictable. And when this unpredictable element comes into markets, then naturally, one tends to move towards safe haven assets. And when I say safe haven assets, it's not just gold which is safe haven asset. There are several safe haven assets. Even dollar is a safe haven asset. During difficult times, people just get out of all the investments they have, and then they, bring dollar back, and they're in cash. So similar to that, there are other safe haven assets like now we have some Bitcoin also, which is considered as a safe haven asset. So that's the main reason. What's going on is something very new. Markets are unable to understand what will be the outcome, and that uncertainty is helping gold prices reach new highs. We are at new highs as far as the gold is concerned. So it just reminds me of how Nifty made new highs post the COVID period, and nobody could put a number where it would go and end. So everything was a guess. So similarly, that's what is happening in gold at this point in time. It's reacting to news flows that is coming on a daily basis. There is some rumor that there will be a pause in tariff a couple of days back. Immediately within an hour, there's a news that it's a fake news, and today it turns out to be true. So it's something that's evolving, and the markets are unable to understand which is real, which is fake, whether to trust this news that comes. And in fact, these news have come from genuine sources like CNBC, Bloomberg. These are all big names that you always trust. So that's the main issue at this point in time, to even trust these sources, because something can be denied so easily and then immediately retraced back. So this is something which the world is getting used to at this point in time, and this uncertainty is why investors are rushing towards the safety of gold.
Okay, sir. Now you talked about geopolitical changes. What about changes in India, sir? RBI recently announced interest rate cuts. Do you think that that could have a direct influence on the gold price surge?
Definitely, it must have been taken into account. We should also realize that RBI has not cut rates for quite some time. The previous governor has been maintaining a status quo because of inflation worries. So this has been the right time simply because there is this recessionary worries that are surfacing, and thankfully crude prices are at a much lower prices, so that doesn't give rise to further inflationary expectations. So, and with this uncertainty of what's going to happen, and businesses, the local businesses, because as a country, post this trade deal that might take place between India and US, we really don't know which of the industries that are going to be affected, and what is the kind of give and take that's going to happen in the trade deal. So all these things would have been definitely taken into account, and that's one of the reasons I think the rate cut would have certainly been factored in.
Okay, so now as you were talking, you said that this price rise is not just limited to gold, but it is also gone to other commodities. But do you feel that this is a premonition to some impending financial disaster or financial crisis, or do you see that this happens from time to time? It's completely normal. Do you feel it like that? What do you think about this whole situation?
No, like I said, this is something new. The markets haven't seen this kind of, see, in the Trump previous administration, though there was the same tariffs that were talked about. It was not a universal tariff of 10% across all countries. It was specifically targeted against China. But this time it's every all countries. So this is something absolutely unexpected. I think no one expected this because US is a free market, and suddenly they go towards protectionism. It is something which one can't digest as a market participant. Even to predict this was very difficult whether you'd actually take this step or not. But eventually he's taken this step. So now what? So there are various scenarios, various possibilities that can turn out. But like I said, it's between two big leaders. So how they're going to sort it out among themselves is going to be something which the market will closely watch, because it's becoming a tit for tat kind of a tariff between US and China. So that is not good for market sentiment, because markets always look for stability. And that is what they're looking for in gold at this point in time, because there is stability. So safe haven assets like gold are inviting these investors because they show some stability during uncertain times. So that's one of the main reasons.
Okay, sir. Now, whenever gold is subject of speculation, India is always interested because India is a major player in gold trade. So, do you feel that there is any hidden benefits for India per se?
No, I think as a consumer, there's not going to be benefit. In fact, it's the other way. It's getting costlier and costlier. And if somebody were to normally buy, let's say, 1 kg of gold, now they will have to make it half or even less than that. So as the price rises, the quantum of gold that we normally import will keep coming down. And it will become unaffordable to many consumers. So when you talk about consumer sentiment, yes, it's not a good situation. But we as a country, we have a decent size of gold reserves. As a central bank, we have a decent size of gold reserves. So that is appreciated quite a bit from, where I remember they've been doing it right from $1,000 odd when gold was trading. So now it's three times that price. So that's the kind of appreciation the reserves will show. So RBI will be able to benefit from this, and then the government will be able to benefit because the government gets dividend from RBI on a yearly basis. So this will be a very huge appreciation this year. In that sense, yes, but also another important thing is that we being a largest consumer, one of the largest consumers of gold, we have such huge reserves in any family at any point in time. There would be some gold in the house, isn't it? So if you calculate, because nobody has done that calculation so far, but just purely going by how much has been imported so far in the last, let's say, 2 decades, is an average of close to 700 to 1,000 tons. In between that has been the average. Now it's come down mostly. As prices go up, the quantum also comes down. So in the last 20 years alone, we have done, let's say, 20 into 500, something like 10,000 tons odd. I'm just giving a very approximate number here. So that's the kind of numbers that we're talking about. In households, we're holding that kind of gold. So it's definitely going to benefit because when you see an appreciation in an asset that you're holding, it gives that feel good. And in a time when equity markets have dropped, because predominantly when you talk about investment, it's mostly the equity market. So there you've seen the huge falls and fall in the value of shares. This is a boon for somebody who's holding gold or even invested in gold in the last 2 decades. So it would sort of neutralize the impact of what we are seeing in the equity markets at this point in time.
Okay, sir. Now, as you were talking about it, gold is seen as a safe haven during uncertain times, particularly by common people and investors. So, do you actually recommend that? Being a commodity expert, do you recommend that running to gold, buying large quantities of gold during uncertain times actually helps us?
See, I've been getting this question for the past 2 decades now. I've been around for some time, and this has been a standard question. At any point in time, is this a good time to buy gold? And it's been going one way. Uh, I'm pretty sure at some point in time, once there is stability, prices are going to correct sizably. But we're not there yet, and it's like a train without a brake. You really don't know where to go and stop. And during these uncertain times, it's extremely difficult to predict what's going to happen. In fact, my sense is down the line, not immediately though. Many of these smaller countries who have gold reserves will start selling gold uh, to make up for the economic problems that they're going through. These are all possibilities. I'm just guessing, thinking aloud here. Um, so to me, having seen gold at $150, because I've seen gold at $150 when I started my career in the bank. From there to 3,150 is a huge dream run. And in the beginning, I remember well, countries like United Kingdom had huge reserves of gold, and they would come in to sell gold from time to time. Europe would come in to sell gold from time to time. So one of the biggest headlines to watch out at that point in time, I'm talking about late 90s, early 2000, is basically how much of gold is being sold. Gold was always under pressure. It was used as an asset to, uh, in times of not just uncertainty, just to take advantage of some financial situation or there's some financial crisis that the economy is going through. Immediately they go towards the reserves, sell gold, and then use that money for something. This has been the case at that time. I think that would repeat itself now. I think we're coming to that situation. So I'll be a little cautiously optimistic at this point in time. I wouldn't recommend saying that this is the best level to do. You can do at any price. It will keep going up. I see definitely a lot of upside till Trump is around, or even his whoever is going to come is going to have a huge problem in their hands managing the debt, the U.S. Debt, which is going to be a big issue going forward. that will create uncertainty. So a lot of uncertainties are certainly going to help gold prices to go higher. But having said that, at this peak price, I would rather wait for some decent correction to enter and just let this whole thing play out. Maybe this rally could till this trade tensions last. It could go up to $3,500 also. But just for that $200-300 from here, I wouldn't take that risk. So I would rather wait and play it out and look for investing only if we see a decent correction from it.
Okay, sir. Thank you. Thank you so much for sitting with us, and thank you for your advice. Thank you for giving your opinion on the whole issue, especially at a time like this when the common people and the investors are very tense, nervous about what's going to happen next, and are looking for advice from commodity experts like you. Thank you, sir.
Okay, Alan. Bye.